The following is a presentation of TFNN.
'Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the July 21st magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a fantastic weekend. I know I did. Let's make sure we do all that we can do to have an extraordinary, let's have a magnificent and magical week ahead of us. And welcome to all our new listeners. And how about, did you catch John Logan's inaugural show? Folks, if you aren't aware, TFNN now is broadcasting 10 hours a day. John Logan, who is the we'll call him the market profile king. He's the CEO of Taz Market Professionals out there. As you know, I use his market profile system to help each of us take a look at different equities, ETFs, futures markets, just to understand where price is traveling. So he now kicks things off for TFNN every morning at 8 a.m., 10 hours of live programming a day. Of course, I do the next couple hours, and we've got Basil Chapman. Then we have Larry Pesavento on Monday. We've got David White. We've got Daryl Martin. Tom O'Brien's show now is going to be from 3 to 5 p.m. during the week, and Andy Heck is going to be doing 5 to 6, I know, on Tuesdays and Thursdays, and we'll get the whole lineup out there for you. But great trading technicians out here, each providing their own systems to help you navigate through these markets. So congratulations. Nice job out there, John Logan. Look forward to his show each day at 8 a.m. here at TFNN. This is an interactive forum. That means you can give us a call anytime you'd like at 877-927-6648. Be happy to take your call, field your question, help identify where price might be moving into, out of. Maybe you're taking a look at getting into a trade. So again, 877-927-6648. And what I'm going to do, my outcome during the next couple hours, is to teach how to master the tools for trading, at least the tools that I like to use out here. Those include A to B equals CD patterns, Fibonacci expansion and retracements. They help us identify Gartley and buy patterns out there. I also love to share with listeners what I call the tools of the mind. So in the next coming weeks, I'll give you a little bit more of a flavor for that. But right now, let's go get to the markets. It is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. We've got Dow Futures trading off 56 points. They're trading out at 16,974. S&P Futures down 7 points, trade at 1964.50. NASDAQ off 8 points, trade at 39.22. Russell down 4.5. She's trading out at 11.42. King Dollar up 2 pennies, trade out at $80.62. Goldilocks up $6 and change, trading at 13.16. Silver up 15 cents, about 0.75%. That's trading out at $21.04. Light sweet crude is up 51 pennies. She's trading out at 103.64. A quick peek across the globe out here. We're going to see that the DAX in Germany, struggling this morning. Is that a message for our markets? The DAX is off 110 points, down a little over 1% right now. FTSE off 28 points, only about 0.4%. Over in Asia last night, a sea of red. The Nikkei down 1%. That was the leader. Of course, we're only looking at 3 of the indices over there. We're looking at the Nikkei off 154 points, the Hang Seng down 67 points, and the Shanghai off 4. So let's begin our day. Quite a day on Thursday last week. Quite a day on Friday. What does it all mean? We're going to need to see exactly what the markets are going to do here during the. I think that today, tomorrow is an important trading session. But let's take a look at a couple different charts out here. You know, I use the eSignal as my data provider, have forever. And then I use 3 different charting packages. I use the eSignal charting package, I use Ensign Windows, and I use the Ninja Trader package. All great packages out here. Right now I've got the Ensign Windows package up on my screen. I've just got some some different, we'll take a look at some different rising and descending price channels out here. Let's start off by focusing on what I think we need to really focus in on this morning. That's a little delayed, 10-minute delay on my Russell 2000 futures contract. So the Russell 2000 right now, what I can tell you it's doing, it's testing the bottom, or the top, I should say, of this descending price channel. So if you're watching us on TigerTV, and I hope that you are, if you're not, you're listening on the radio or your mobile device at TFNN.mobi. We appreciate that. You can always catch this show streaming live to your smartphone, smart device, pad, or what have you by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphone devices on it. Click on that. The show will stream live to you. What you're going to look at here is a 120-minute time frame chart for the Russell 2000. Now, this had been traveling in a descending price channel out here, and it broke through going into the close here, well, really into the, what's the time frame chart I'm looking at here? Where is it? Looks like 15:30. Yeah, a 2-hour chart out here. So coming into a 3:30 time period on Friday afternoon, what we can see here is that the Russell 2000 was able to break above its descending price channel. So the key here, whenever you break a trend, whenever you break a, whether it's channel lines, trend lines out here, what you actually like to see to prove that the breakout is real is a test of that trend. That's what's going on inside the Russell 2000 and the rejection of it. If, in fact, the Russell 2000 trades back inside this channel line, this downtrend channel, what the Russell will do is it will continue its move lower. Now, where will it continue its move lower to? At a minimum, it ought to move all the way back down to the lows that were put in at about 5:30 in the evening, and that was on Thursday, after obviously the Malaysian error, not obviously, but after the sell-off led by, who knows, was it led by the Malaysian Air incident? I believe that it was. So that's what that would signal to us. Likewise, the other side of the deal here, and this, by the way, this 2-hour session doesn't end for another 17 minutes out here. If this level gets rejected, meaning it tests it, and it then begins to move higher, then what you would see inside the Russell 2000 is the formation of an A to B equals CD to the upside. So that's what's going on inside of, that's what's going on inside of the week indice out here. Let's go take a look at the one of the strong indices out here. Let's take a look at the Dow. Now, in the Dow here, we're looking at a... the heck are we looking at a 30-minute chart? No, we're looking at a 2-hour chart here inside the Dow as well. So I've got a little rising price channel. So unlike the Russell 2000, the Dow has been inside a rising price channel. And we're taking a look at the co-located open and closes, co-located bodies. Doesn't matter whether it's an open session or a closing session out here. And that says that when we took a look at the Dow moving higher on July 17th, as it was making its high out here, that level was at 17,085. This is the futures contract we're looking at. That's going to be a key number for us to keep pace with. The Dow has not broken its rising price channel. It's come down and it's tested it. You know, the most recent test was back here on July the 10th. It did not even get down there on July 17th on Thursday. Formed a little doji-style candle out here, and then a little bullish engulfing, a little morning star reversal. So that says that pretty decent support at the low of last Thursday. That's at 16,835. I would say more important is the support of the rising price channel out here. Can't tell you exactly where that's priced at. It depends on time because it's rising, but it's probably somewhere right in the 16,800 range out there. That's what's going on its chart. Let's take a look at what else we want to take a look at. Let's take a look at the Euro-Japanese yen. What do we have going on inside the Euro-Japanese yen? We'll switch over. We'll take a look at the daily chart. Euro-Japanese yen right now, this is the 120-minute time frame. Now, what the Euro-Japanese yen did as it was making its low back here, this is a low coming in at 6:30 in the evening. This is on July 17th. It had formed a 1 to 2.618. A to B equals CD to the downside. That price projection, that oversold price projection, 136.69. The actual low came in at 136.69. You tell me, folks, how did Leonardo, not DiCaprio, Leonardo da Fibonacci come up with this? Well, I know how he came up with it. I know about the summation series indices, the summation. Oh, man, I have a little brain contusion going on here. That's okay. Let's just face it. A 1 to 2.618, A to B equals CD to the downside, stopping at the exact tick out there. That is a beautiful thing. Now, what we're seeing here is a little bit of a little cone out here. If we take a look at the trend, we'll come off of the low. That low from that specific candle, I'll use that as the low. Probably right in there. Seems to be a pretty decent trend line out here. That says that we take a look at the downside trend line out here. I'll use the high high. This is from about the somewhere in the 5:30 a.m. a session on July 18th out here. And there's your little descending cone. We'll see which way this is going to break. If we take a look at the daily chart, the daily chart suggests that what this is going to do is break to the upside out here. What I mean by that is here's the daily chart. I'll pull this back for you for a moment. Take a look at that rising price channel. It's a long-term rising price channel, been in effect, really began forming back in July of 2012. And what the Euro-Japanese yen has done here, it's made an A to B equals CD to the downside. It has broken, so it's got two competing patterns here. We're going to find out if the trend is its friend or not any longer. That's inside the Euro-Japanese yen. Why do I say that? Well, I say that because of this yellowish pattern. If you're watching us on Tiger TV, it's a 0.786 Gartley buy pattern. It completed on the trading session of May 29th. And then since then, it's had only about a dead cat bounce, a 0.382 retracement. It was moving sideways, finally broke through that support level, which was set up by the June 12th lows, and it broke that support level. It did it on Thursday, July 16th. Then on Friday, July 17th, continued moving lower. No, July 17th was it broken on Wednesday. Thursday it continued moving lower, so this was well before the incident in Malaysia. And then price on Friday moved down and found support at, of course, the bottom of that rising price channel. So, I'm typically a failed Gartley pattern will turn into a butterfly. But like any failed pattern, what you've always got to look at is where's the next logical area of support. Well, it's very clear when we take a look at the Euro-Japanese yen out here, and we'll see if it can find some legs here. What does that mean? It means if it does find some legs, and the Euro-Japanese yen, which correlates really well to the U.S. stock market, even though the markets have been going up for the most part, the Russell 2000 being an exception out here, even though the markets have been going up for the most part, the Euro-Japanese yen, it just seems to have not had much of a difference. And it's a divergence that's been going on for a while out here. So if this does start moving to the top side, upside, meaning that it finds its legs and its support here, it can only mean bullish things, or should only mean bullish things for the marketplace out there. Let's go take a look and see what's going on inside of the futures contracts. Let's go take a look at the 4 futures contracts out here. We'll take in the upper left-hand corner. In fact, we've got the Russell 2000. Let's go take a look at it. Russell 2000 from swing point low on the trading session of May 15th all the way to the high that was put in here on July 1st. We know that this is nothing but a large consolidation. Huge consolidation. The consolidation lows have been, in essence, been in place ever since the trading session of November 8th, 2013. So those lows are fairly significant, those lows being right around the level of 1069 out here. But again, if you go from the current swing point low to high, what you'll see is on Thursday and Friday, it's the 0.618 retracement level that acted as support. That's 1127.40. Look, folks, if the Russell 2000 closes below, let's say the July 17th low out there, 1123.80, pretty good chance. Well, price will run to 1104, and then I'd have to say down to about the 1074 level. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Futures off 53 right now. S&P down 5.5. We do have a special going on. If you go over to the homepage of TFNN.com, you'll see a little, what we call our little carousel over on the left-hand side. The second one from the top says free trial offer. That's my newsletter service, Mastering Probability. If you click on that link here, you're going to be able to test drive the newsletter service 30 days. There's no charge to your credit card up front or anything like that. That means you can cancel it on day 2 if you want. You can cancel on day 29 out there. What it's going to give you access to is not just my newsletter service. You're also going to get access to my workshop, my money management workshop. That's about a 90-minute webinar out there. That's something that is a must for anybody that is trading. So you've got access to that for 30 days, about another 30 hours worth of educational material. So if you are, depending on what level of technical skill, whatever you're trying to either learn, might be starting from scratch. Maybe you've been using different technical tools. And you like to learn about more of them. Well, all that is contained within the 30 hours worth of additional workshops that I have done for clients over the past out there. So do yourself this offer. By the way, it expires today. So get over to don't delay, don't procrastinate. Get over to the homepage at TFNN.com and sign up for that right now. If we take a look at things moving in the pre-markets out here, we've got leading the charge to the downside. Shire PLC, SHPG is a ticker symbol. That's been all over the place. But really, Lorillard, LO is a ticker symbol. I mentioned that this had formed a island reversal candle formation back on July 15th. Right now, it's trading at $60.36. If we take a quick look at it here, you'll see a nice island. Now, this is also at all-time highs out there. So it doesn't get any more. That's a beautiful-looking stock chart with the exception of this island reversal candle formation out here. And that is as bearish as they get. Likewise, if you see that high get taken out, meaning it close above 67.46, that will tell you how strong the stock is. But as we speak right now, it's trading off of its close from Friday. Price made it back to its market profile resistance area, its market profile high, at about 62.11. It got up to a top of a high of 61.82 Friday out here. Let me see where this is trading right now. $60.30. So 60.30 is going to, it's not going to take it underneath that swing point, not just yet. 59.50 is that number, which would set up an A to B equals CD to the downside out here. So LO is the ticker symbol. That's trading off a bit this morning. We've got the IWM, it closed at 114.23. Right now trading out at 113.52. If we take a look at the IWM, nice bullish reversal candle signal here on Friday. We'll see. That says that the support ought to be at the low of 112.20. Any close below 112.20, and that'll likely set up a move all the way back down to its consolidation lows, the May 15th level. That's what's going on inside of the IWM. To the upside, we've got the GoPro. GPRO is a ticker symbol. Closed at 41.43 right now, trading out at $43.11. At 43.11, it's going to take it into its swing. Well, not exactly. 44.40. It's a daily chart. It's a new IPO, as most of you know. The low swing point out here, swing point high, I should say, the low of the swing point high is July 1st. That's at 44.40. Looks like it's going to make a run for that. Not enough information to really provide you with much in the way of, we'd have to really go down to a intraday chart to give you any kind of real information. That is GoPro. But eye candy. It's Candy Technologies out here, KANDI. KNDI is a ticker symbol. It closed at $19.62, trading out at $20.90 right now at $20.90. It's going to be taking on the July 17th swing point high. That's at $20.94. Had a nice breakout session here, broke out from a bit of a base, broke out above a market profile high, and that was on July 14th. Big volume out there. 11.7 million shares. As we pull this back, what eye candy is trying to do out here, it's really not eye candy, but sounds pretty cool. March 18th, that high is 22.40. Break above 22.40. That'll create a very large A to B equals CD to the upside out here. That's what Candy Technologies, KNDI, is attempting to do as we speak right now. You've got, what else do we have out here? You've got... to the upside, you got Apple Extreme Networks, EXTR is the ticker symbol. Looks like they may have been out with numbers out here. That is trading out right now at $4.98, closed at $4.37. So a nice little pop there. This has got some trouble, so we'll see. It's got some trouble in River City. That was this huge wide price spread accelerated downdraft session from May the 7th. That is where she is trading into. 877-927-6648. This is Steve Rhodes. This is Tiger Financial News Network, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 67 points, trading out of 17,033. S&P down a little over 5 at 1972. NASDAQ Composite up about 10 points, trading out at 4422. Russell 2000 up 6 points. The leader in the clubhouse on the way down percentage-wise, off about a 0.5% off by 6 points out there. Lead the charge the upside. Netflix up $10 and change this morning. Baidu up $3. Amazon up $1.34. Gilead Sciences up $1.45. GoPro up $1.33. EMC Corp up $1.30. Candy Technologies up $1. CBS Outdoor America up $1. To the downside, Shire PLC off $3 and change. Google off a couple of bucks. Yum Brands down about 2.5%, up $2. Monster Beverage, MNST. Wonder if they were out with numbers, down about $1.96. No numbers that I see there. Reynolds America RAI down $1.27. Nothing really huge to the downside out here. So the markets, as they start off the day, moving to the downside. If I take a look at a 30-minute chart out here, let's go take a look at it. This is the ES Mini. If we take a look at it, it formed a little hammer candle here. This is in the trading session as we came into the open, 9:30. That's a good piece of information for traders out there. That says that low at 1963.50 is a key number to be watching. The close below 1963.50 on a 30-minute chart says if you're long, you are wrong. Likewise, if that hammer candle session below holds out there, means it gets tested and it gets rejected out there. It just says be cautious if you're on the short side out here. So that's what the 30-minute signal shows us. Let me switch over and take a look at the NQ. Since that has been a lead dog out here, let's go see if there's any candle signals out here inside its stock chart. So that chart will go ahead and update. We take a look at it. It did not provide a hammer candle, a little confusion. How about that? A confusion candle. That's a high wave. Just means it's kind of lost its way out here. So no real signal here from the NQ on its 30-minute chart. Had a request inside our Tiger's Den to go take a look at Microsoft. So let's go take a look at Microsoft out here. In fact, folks, if you would like to see all of these charts here in HD, the easy thing to do is come over to the homepage of TFNN.com. And you can go ahead and test drive the Tiger's Den. You have incredible, extraordinary human beings inside there, great traders, providing you with all kinds of information. You get to see each of our charts live here, so each chart that gets posted versus the Tiger TV. Now, if we take a look at Microsoft, I don't know if the individual is long or short. Does it really matter to me? No, because we're going to take a look at the stock chart and see what the message is. Microsoft has been on a tear. Pretty hard for it to do that, but right now up towards its session highs. Trading out at 44.44. Had a nice big session with some big volume on the trading session of July 17th out there. If we take a look at its breakout, where did it break out from? Well, it broke out from the trading day of July 15th. So if Microsoft pulls back on light volume to the July 16th low, right around 42.48, and then moves higher from there, that is very bullish. Expect that to be a support level. The market profile support just beginning today, not as important because really it's in place today. We'll look at just simply breakout support. There's some strong support. Trading session here on June 27th. Wide accelerated volume, I should say. Wide, but not so much wide price spread. But the high of that is 42.29, which is really tying right into where Microsoft broke out on July 15th. So the daily chart looks pretty good. Are there any patterns out here that it's trying to complete? Well, if we look at the A to B equals CD pattern out here, that A point is going to be the low from January 14th. Our B point is going to be the high out here on April 2nd. And the C point is going to be the little hammer candle, that low on May 7th. You can see it has completed a 1-to-1 A to B equals CD. The price projection was 45.54. It got up to 45.71. That was on July 17th. Let's go out to Philadelphia to our man, John. John, thanks for calling. Thanks for holding. How you doing this morning?
Steve, I'm doing very well. It sounds like you are doing the same. I have to compliment TFNN on this new scheduling lineup, getting John Logan to contribute some thoughts and parameters pre-market, 8 a.m. What a great addition to your services.
I couldn't agree with you more. I think it is just wonderful. And folks, if you're not aware, TFNN has expanded to 10 hours now of programming each day. So 8 a.m. if you really want, if you're up early and you want to get a feel for what's going on. John is he's our market profile king out there. So very helpful to help you navigate what's going on inside the market. So thank you for mentioning that, John. I appreciate it.
Steve, I wanted to ask you, I wanted to revisit the NASDAQ 100 stock index.
Yes.
I had a specific question for you. But first, I just wanted to observe, since the April 15th low, and that was actually a double bottom with the February low, the NDX has rallied from 34.15, give or take, up to 39.50 area. That's a move higher of 16%. So we've had a good move.
Absolutely.
And my work leads me to conclude purchases or long positions here entered at this price are not a good odds speculation, at least right here near term. So that's kind of what my work concludes. But I want to make sure I'm covering bases and ask you the question, can you see any set of conditions under which the NDX continues to power higher another 3 to 5 or more percentage points higher from here?
Yes, of course. I could always find a bullish case and a bearish case out there. I think that if I take a look at maybe a longer term, so to answer your question, first where I would start off would be I would come over and take a look at the at just simply the composite. And inside the composite now, it's July 7th. What is today? July 21st out here. So the thing I'm looking at right now inside the composite, and I'll switch back and forth between the NDX and the composite here. But if we take a look at the swing point high from March 31st, 2000, the low there is 43.55.69. We're at 44.14 right now. So from the longer term charting perspective, where the the longer term trend has more bearing than the daily, than the weekly, and so forth, we're trading inside that swing point. If in the month of July we close inside there, our work, if we take a look at what Tom has taught us, is certainly if you close inside a swing point, whether it's with volume or not, you're more likely going to go test the high of that swing point. So that's the first bullish scenario, I would say, with regard to the NDX and it having the ability to be able to run higher. So that's taking a look at a monthly chart for that. If we take a look at the weekly chart now, has not hit the swing point high. The swing point high back from 2000, and that's at 47.22.14. So if, which is another several hundred points higher. Now, how would we get to 47.22? How we would get to 47.22 is coming back, and now I'm going to switch back into the futures contract here just for a moment. And as I take a look at the NQ, it still has unfinished work to do to the upside. And that is on the daily chart. So I've taken, the composite on the monthly says, hey, we're inside the swing point. It says it can move higher. The weekly chart says, well, we're not there just yet, which is the 4,700 level. The NQ has a 300-point consolidation pattern that it broke out of it and has not completed to the upside. And that says that price ought to get up to 4,100. We've only made it to 39.19. So on 39.19 times 5%, what is that? Another 200 points? At 3,900, add 200 to it, you're at 41. So that's how I would say, yeah, there is that possibility. I can give you the scenario where the NDX could make that run. It's broken a consolidation, and the measured move says it ought to be able to power up to 4,100. Now, intraday, from an intraday cycle, if I take a look at what's going on inside of the NDX specifically, so I'll switch over to that, and we'll take a look at patterns out here. What the NDX needs to do in order to be able to move higher is close above the high, John, from the trading session of July 16th. So your analysis that, hey, the risk-reward probably isn't worth it here just yet, that's supported by the mere fact that the NDX was making a higher high on less relative strength and then had a little gap down on the trading session of July 17th out there. It says that, John, in my opinion, in my work, if you were to see a close above that high from July the 16th, and that level is 39.47.49, then the scenario that I just laid out that could let the NDX run another couple hundred points higher in that 3 to 5% move that you mentioned is what would likely unfold, because there's nothing more bullish than a bearish reversal pattern that fails out here. And so that's how I would, because you asked me to try to put together the bullish case, that's what I would come up with.
Gotcha. Steve, thanks for sharing the Rhodes momentum indicator work as applied to that daily NDX chart. That's very helpful to view in the Tiger's Den and on TigerTV.
Thank you.
I just wanted to ask a question about a feature that is shown on that chart.
Yes.
The very specific question is if one was long here, what sort of stop, what sort of price do you see that if the NDX goes below would give you a high confidence idea that in fact the trend had turned lower, at least short term, and some sort of trading top had formed?
Yeah, it's a great question, and thanks for asking it. You had identified, the lows inside the NDX and the run-up that it's had. It's been a heck of a move. Interestingly enough, on the trading session of May 19th, which was another real buy point, technically speaking, it was when the 20-day exponential moving average across the 50-day, and that level has not been pierced since then. So I would say the first identifier that the trend is turning to the downside would just simply be a close below that 20-day exponential moving average. Right now it's priced out at 38.80.14, and we haven't seen a close below that level since that May 19th time frame. So it's a pretty decent indication of the power of the trend. In fact, it was touched once. It was touched on the trading session of July 10th out here. And interestingly enough, the session on Thursday was not able to even push down into it. So, what I'm looking at more so than the NDX, and actually I like to look at both strength and weakness. And you've done a great job of, bringing up the NDX, which is really the strong horse out here. I think what's most important for us to be looking at, in addition to this, is really what's going on inside the Russell 2000. Can the Russell 2000 drag everything lower with it? No, because we've proven here, or it's proven, that over the past 7-10 days or so, it's moved lower while the other indices have moved higher. However, what the Russell 2000 can do for us is if it reverses courses, if it puts in a bottom out here, if it puts in a low and we start to see it move higher, it can join the other indices out there. So I think watching the Russell to see what its moves might be is something that would be helpful in doing an overall analysis as to what might be going on inside of the markets out there. So does that assist you with, I guess how I might look at it?
No, it does. It does very very much. Real thorough. I appreciate the update. We'll take it from here, sir. Have a good day.
Okay, thanks. That was John in Philadelphia. That was just a little analysis of what's going on inside the NDX 100 out there, as well as the Russell 2000. I'll put the Rhodes Momentum Indicator chart out here. I'll go back to the NDX for you. In fact, as long as we're here, we can take a look at a couple of different things. If we take a look at the NDX specifically, though, because what you want to see, if the market's going to really crack, you've got to see the NDX is, you don't have to, but likely what you would see is the NDX crack out here. And if we take a look at the one of the little signature areas that I identified to help me understand the power of a trend out here is, and you may not see them very clearly. You should see some boxes, some colored in boxes on the chart. In fact, let me just do this. Give me a moment here. I'm going to turn a tool off on one of the screens out here on that actual indicator. So give me a moment to do just that. I want to turn my trend, or part of the trend, the colorized trend feature off. Okay. So I've done that. Let's put that back up on the screen here. It'll make it a little bit easier to see these boxes here. And what you're going to see is you're going to see some red and green boxes out here. Now, this is a trend-based system, so this really helps you understand the power of the trend. Why is that important? Because if you've ever been in a trade and you've been on the wrong side, typically you're going against the trend. Now, there's nothing wrong with trading a counter-trend move. What we like to do is we like to trade leading indicator patterns, such as an A to B equals CD, and then you'd like to learn how to buy and sell the D point. It's a workshop that I teach. You'd like to understand Gartley and butterfly patterns. You definitely want to understand candlesticks as triggers out there. So you can make some counter trend moves. What you have to do, though, is you got to have a tight leash, because you have to realize you are now swimming against the tide. You're trying to call the top or the bottom of a move out there. That's why I like that price relative strength divergence pattern, because when you get that going with other patterns set up, it's just very helpful. Now, these little red and green boxes that you see on my screen, in fact, let me just do this here. Let me turn a couple of things off. Let me just delete some things here, and it'll make it a little bit easier. So we won't pay attention to the candle signals out here, or I'll pick them out myself. So let's get rid of that. Let's actually get rid of almost everything out here. Everything. Let's get rid of. Remove this. Okay. Now we're talking. Now let's come over here. Now the only two things that we have out here are we just simply have the candlesticks, and we've got these red and green boxes. Now, these red boxes, they tell you the strength of a move out here. And when you are only seeing red boxes, look, it tells you that it's a super strong move. Well, we've got a break coming up. When we get back here.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Folks, don't forget the opportunity expires today. The opportunity to go ahead and get a free trial to my newsletter service, Mastering Probability, no charge to your credit card. So you've got access to the service, all the great education that comes with it, especially that money management workshop out there, 90-minute money management workshop. So if you go over to the homepage at TFNN.com, over on the left-hand side, the little carousel, that's what we call it, you'll see an up and down arrow. Click on free trial offer, sign up. That is going to expire this evening out there. So do not not procrastinate. Do not hesitate. Right now, we've got the Dow is off 54. S&P is down 4. NASDAQ composite off 5. NDX 100 down 4 points. So before we went to that break there, what I was trying to show you was the signals inside the Rhodes Momentum Indicator. Now, a typical market will switch off from red to green, red to green. You'll see green little signals out here. Don't worry about the letters on them. You'll see red little signals. This kind of like what I call, it's Stevie's EKG of the market. You want to understand the heartbeat of the market. When you see a move and all you've got here is these red signals, it's telling you that buying pressure comes in before the normal level of the sine wave, because that's really all it is. A sine wave is, just up to down, up to down, up to down kind of a move out there. It just really tells you about the strength of the buying pressure out here. If I switch over to take a look at a monthly chart, as an example out here, here's a monthly chart. And if you come down to the back here to the time frame of last time we got, well, I shouldn't say the last time, but back in November of 2008. So here's a monthly chart. November of 2008, right? The markets makes a low. March of 2009. We actually get a buy signal inside the Rhodes Momentum trading indicator system out here in the month of April of 2009. So, and you can see since that time period, nothing but these little, and this is a monthly chart we're looking at, and this is the NDX on the monthly, nothing but these red signals. We see one retracement, one pullback into a low that actually formed here in August of 2011. The actual Rhodes Momentum Indicator signal took place the following month in September. And then in the month of October, when you got to close below that high, that gave you another signal that was time to go ahead and put longer term, again, it's a monthly chart we're looking at here, longer term money back to work. You could have put it to work here with the red signals being formed, but you needed to truly utilize a different stop system out here. You can see on a monthly chart just how strong this is. Now, look, you got price that is making higher highs with less relative strength, but you really need to understand how to trade that pattern. Just simply doing that alone, that can resolve itself over time by continuing to move higher and by gaining some relative strength out there. So very strong move, as you can see. Likewise here, how does this signal? This works through the course of time out here. Inside the marketplace and on any time frame. So that's the Rhodes Momentum Indicator signals and strategy. Inside today's newsletter service are a listing of the strongest high beta stocks, strongest IBD 50 stocks, some of the strongest direction shares, ETFs, just in case. What we're seeing here is actually the formation of another little bottom that could take place over the course of this week. Now, if we come back and we take a look at the 30-minute chart, I mentioned as we were coming on the air looking for signals out here, I mentioned a little hammer candle that had formed in the 9:30 session out here. What we can see is that hammer candle was tested and it has held out here. In fact, you're getting a little bit of a bullish engulfing candle. So the 30-minute chart for the S&P futures is saying with regard to the downside, hey, not so fast out here. Again, that's an important low that came in at that 9:30 a.m. session. That low out there is 1963.50. You see it close below that today on a 30-minute chart in the S&P futures, and it says if you're long, you are wrong. Folks, it is a magnificent Monday. Thanks so much for joining us. Remember, at TFNN, we're kicking things off at 8 o'clock each morning. Our man John Logan, the Market Profile King, starts us off. Have a great day. Look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.